Friends, something massive just happened in global finance. The world's eyes are glued to the US right now, and for good reason. Every time the US Federal Reserve makes a move, it sends shockwaves through markets, economies, and even the daily lives of people across continents. The US Federal Reserve just cut its interest rates again, marking its third cut in 2025 and the sixth since late 2024. This isn't just a routine adjustment. It's a clear signal that the world's most powerful central bank is trying to boost growth and keep the global economy on track. Why does this matter to us in India or anywhere else? Because the US dollar sits at the very center of the global economy. It's the currency that connects trade, investment, and finance from New York to Mumbai, from London to Tokyo. When the Fed moves, the world feels it. Stock markets react instantly, currencies shift, and investors everywhere start recalculating their next steps. Lower rates mean money is cheaper to borrow, sparking spending and investment everywhere. Businesses can expand, families can buy homes, and entrepreneurs can chase new ideas with more confidence. For investors, this is a green light. Markets could rally, and new opportunities are opening up. It's a time when optimism can surge and fortunes can be made or lost in the blink of an eye. The Fed also stopped pulling money out of the system. Think of it as rain after a long drought. More liquidity means more fuel for growth, and that can change the entire mood of the markets. These shifts can directly impact your savings, investments, and dreams of financial freedom. Whether you're planning for your child's education, a new home, or your retirement, these decisions ripple into your life. The decisions made in a boardroom thousands of miles away can change your financial future. It's a reminder that in today's world, we're all connected by the flow of money and policy. This isn't just news. It's your invitation to learn, strategize, and get ready for the next big wave in assets like Bitcoin. New trends are emerging, and those who pay attention can ride the wave to new opportunities. The game is on, and you have a front row seat. Stay alert, stay informed, and remember, the world is watching, and so should you. How do interest rates affect your money? Let's simplify. When rates are high, safe investments like fixed deposits look attractive. Good returns, low risk. But when the Fed cuts rates, those returns shrink. Suddenly your money isn't working as hard. Investors everywhere start searching for better returns, even if it means taking more risk. That's when stocks and cryptocurrencies become appealing. They offer the potential for much higher gains. Low rates push people out of their comfort zones and into growth markets. It's a basic rule. Capital flows to where it's treated best. High rates, safety. Low rates, opportunity. The Fed's rate cut is a giant sign. Go hunt for bigger returns. That's why crypto rallies when rates fall. The hunt for growth is on. To see where we're headed, let's look back. History has a way of repeating itself, especially in the world of finance, where every move echoes through the markets. Understanding the past helps us make sense of the wild swings we see today. In 2022, the Fed hiked rates 11 times to fight inflation. Money got expensive, and crypto crashed. The cost of borrowing soared, businesses tightened their belts, and riskier assets like Bitcoin took a nosedive. Investors watched as the crypto market lost billions in value almost overnight. But starting September 2024, the Fed reversed course, cutting rates 6 times. This dramatic shift signaled a new era as the central bank tried to stimulate growth and calm recession fears. Suddenly, the mood on Wall Street and in the crypto world began to change. Each cut boosted confidence and markets rebounded. Investors who had been sitting on the sidelines rushed back in, eager to catch the next wave. Stocks and crypto alike saw renewed optimism, with prices climbing higher after each announcement. Bitcoin surged. Just before the latest cut, it jumped over 5% in 24 hours, hitting $94,640. This wasn't just a blip. It was a sign of how sensitive crypto is to policy changes. Traders scrambled to buy in, hoping to ride the momentum. Investors anticipated the move, piling in ahead of the announcement. Social media buzzed with speculation, and trading volumes spiked as everyone tried to get ahead of the curve. Timing, as always, was everything. The Fed's tone now drives crypto sentiment. Every word from the chair is dissected. Every hint of a future move sends shockwaves through the market. In this environment, perception can be just as powerful as reality. But it's not a smooth ride. Recently, a flash crash wiped out $19 billion in leveraged positions, and fear gripped the market. Volatility remains high, and fortunes can be lost in minutes if you're on the wrong side of a trade. Still, the Fed's shift turned fear into optimism almost overnight. The mood flipped, and those who stayed patient saw their portfolios recover. It's a reminder that in crypto, resilience can pay off. In crypto, fortunes change fast for those who stay informed and keep their cool. The winners are often those who can separate noise from signal, reacting quickly, but not impulsively. The lesson: watch the Fed and be ready to act. Policy decisions can create opportunities or risks at a moment's notice. Staying alert is your best defense. The link between policy and price is real. In today's market, understanding the Fed's moves isn't just helpful. It's essential for anyone hoping to thrive in the world of crypto and beyond. Lower interest rates aren't just numbers, they change how people feel. When the Fed cuts rates, optimism returns. Investors crave growth and are willing to take more risks. Bitcoin thrives in this environment. It's the ultimate risk-on asset. High rates push people to safe havens. Low rates send them searching for the next big thing. That's why Bitcoin's price jumped before the December cut. Confidence was back. Lower rates make borrowing cheaper and holding cash less attractive. Money flows from safe assets to high-growth bets like crypto. Bitcoin leads the charge, pulling the whole market with it. When rates drop, the crypto rocket ignites. The psychology of risk is everything. The big players have arrived. Banks, hedge funds, and asset managers are now deep in crypto. Falling rates force them to seek new growth, and digital assets are the answer. Giants like Bank of America and Vanguard now offer crypto products to clients. Over $120 billion is locked in spot Bitcoin ETFs. This is long-term, smart money. Major banks are launching direct Bitcoin trading for wealthy clients, making crypto more accessible and legitimate. As institutions pile in, they stabilize prices and attract even more capital. On-chain data shows big holders are holding, not selling. The institutional effect is real and just beginning. This is a new era for crypto. Spot Bitcoin ETFs changed everything. Before, buying Bitcoin was complicated. Exchanges, wallets, private keys. Now anyone can invest in Bitcoin through a regular brokerage, just like buying a stock. ETFs hold real Bitcoin, so every share you buy adds buying pressure to the market. Over $120 billion has flowed into these products, from both institutions and everyday investors. ETFs make crypto accessible, safe, and familiar. The impact: more people, more money, and more momentum for Bitcoin. The ETF revolution is expanding to other coins and even retirement plans. This is the bridge between old finance and new. Simplicity is unlocking massive growth. When Bitcoin rises, it lifts the whole crypto market. Profits from Bitcoin often flow into smaller projects. This is altcoin season. Newcomers like Pi Network, with its mobile-first mining and huge community, could benefit big. In bullish times, investors look for the next 10x or 100x opportunity. If Pi Network launches its mainnet and gets listed, it could ride this wave. Success isn't guaranteed. Pi must deliver real value and get on major exchanges. But the timing has never been better for new projects. A rising tide lifts all boats, and the tide is strong. For Pi's millions of users, this could be the moment they've waited for. This isn't just a market rally, It's a new era of opportunity. The Fed's shift, political changes, and new technology are rewriting the rules of finance. Now, anyone in India can access global investments with just a smartphone. You don't need millions. Fractional investing and ETFs level the playing field. Supportive policies, institutional money, and innovation are creating a once-in-a-generation chance. The old gatekeepers are losing power. Individuals are gaining control. Don't just watch. Learn, understand the risks, and position yourself for growth. The future of finance is being built now. This is your moment to participate. The wave is here. Ride it. My friends, this is your time. India is on the brink of a new financial era, and you are at the heart of it. The choices you make today will shape not just your future, but the future of our nation. The old path, FDs, gold, property, still matters, and these traditional assets have built generations of wealth. But now, digital assets offer new, faster opportunities that were unimaginable just a decade ago. The world of finance is evolving at lightning speed. Big shifts like these create chances for those who pay attention, adapt, and are willing to learn. Every major change in history has rewarded those who saw the signs early and acted with conviction. It's not about getting rich quick. It's about being smart, curious, and brave. Take the time to understand how the financial world works. Learn about the Fed, Bitcoin, and new projects like Pi Network. Explore how these innovations are changing the way people save, invest, and build wealth across the globe. Knowledge turns risk into strategy. The more you know, the better you can navigate uncertainty and make decisions that work for you. Don't be scared by jargon. Focus on the basics: supply, demand, psychology. These are the building blocks of every market, old or new. Understanding them gives you an edge. Start small. Invest what you can afford to lose and treat it as a learning journey. Every mistake is a lesson, and every success is a step forward. The digital asset space is open to everyone. Use your tech advantage. You have access to information, tools, and communities that previous generations could only dream of. Whether it's Bitcoin or the next big thing, the opportunity is real. Stay alert, stay informed, and don't be afraid to take calculated risks. Be disciplined. Keep learning and believe in yourself. The journey may be challenging, but your persistence will pay off. The future belongs to those who prepare today. Take charge, dream big, and make your mark. Jai Hind.